Hey guys, my name is Ruben. Dante. In this video, we're going to go over something that is pretty important to me, and it is what is known as first principles thinking or deductive reasoning. And the way I really apply this to the markets, I think these two ideologies are quite popular, but they've been more colloquially known or adapted as quote unquote red pills from the matrix, right? But what first principles thinking really applies to, and it's something that most great philosophers, or a lot of them, excuse me, have been really big fans of, as well as Elon Musk being a big proponent of it. And what the basic ideology is of first principles thinking is that you break things down to the most basic, absolute reality of the situation or the most basic components as we know it, right? And deductive reasoning kind of alludes to the same thing. But the reason why this is important is because if we understand supply and demand, or we understand any form of trading, and really anything that we do in the world, it has a lot to do with really seeing the foundational basics. And what we know about supply and demand, if you follow Sam Seiden or myself or anyone like that, is that supply and demand is something that is relatively absolute in everything that we know of the markets. And so the reason why this is important is because, as I said before, the way we buy in the markets is the way we buy and sell anything, right? Low and high, which is a very easy, uh, almost condescending way of explaining things, right? But once we understand that basic principle, then we see the difference between the markets and everything else, right? The fact that the difference between the markets and real estate is, for example, that we do have a lot more liquidity, we do have a lot more options to get in and to get out. And generally speaking, it's in terms of leverage, liquidity, barrier to entry, it's one of the most seamless ways, in my opinion, to make a living, right? And living off of your and acquiring your financial goals, which ultimately really means your mental, emotional, and spiritual sovereignty, and finances assisting that sovereignty in this time space as we know it. And so as we understand that basic structure, then what we can begin to focus on are the path of least resistance to acquire those things. And what I mean by that is, if we know that we want to buy low and sell high, then the path of least resistance with that basic understanding is immediately looking for the highest time frames of possible going long or going short. And so with that said, nothing I say is a buy, sell, or hold recommendation. You can lose all or more of your capital trading and investing in the financial markets. This is simply for entertainment and educational purposes only. And so with that said, you can, like I said, lose all or more of your capital, and I am proficient in the market. So understanding that uh, our goal is, by nature of first principles, is to capture the biggest possible gain, and then begin to understand what our biggest concerns are. So whether that be blowing your account or having a loss that you can't refuse, and or that you cannot withstand. And the reason I bring that up is because a trader I was talking to earlier today, or that came up earlier today, excuse me, was talking about, whenever he takes on a trade, sometimes he loses way more money than he expects. So he looks at jumping into a trade as money that's already written off. Well, by the nature of first principles, if we take that basic ideological concern, the path of least resistance is not to immediately address the psychological components that composite that concern, right? And so the the path of least resistance would be, if we're going to look at the markets in that way, would be to then focus on controlling the purchase and finding the biggest risk reward in terms of buying something that you're going to write off as a loss, right? And so with that principal psychological components and concern, although I'm not a psychologist, and so don't treat me as such, or like I said, this is for entertainment purposes only, but would then be to look at out of the money calls or just buying puts. Why? Because what you pay for upfront is could be said to be written off as a loss, especially if you're looking in context of supply and demand, which again is a universal principle and theory. And so by understanding that, then we understand that um, we're trying to get the best risk reward in context to buying a call or buying a put, uh, in terms of supply and demand. And so then we can look at the markets that can provide that for us. And so then, by nature of first principles, the way and the path of least resistance to find appropriate trades is to index your watch list by percentage move. Why? Because as I always say, and I'll keep saying on every video for probably a while, is you can buy $1 share and buy 100 of them for $100 open or $100 risk if you want to see it in terms of risk, and or you can buy one share that's $100. And so then what's going to end up mattering the most is the percentage move, right? Because you can buy more of the same, and why share splits and all of that can be a little bit tricky for people to sometimes comprehend. And so by that nature, since we're going off of percentage, we can begin to see, well, what is applicable and what's the path of least resistance in terms of the biggest possible opportunity in context of today, the biggest. Uh, and then once we open that up, for example, here in QS, which is the trade that we opened yesterday, we can see that this is the daily chart, but we can see that uh, the upside, the range is $133. Yesterday's low S, or even today, is $63. So then we can see that this move here from $20 to 130, which is a 557% move, happened in a time frame of around, well, from 11/17/2020 to now, right? So not even now, it happened within almost a month and change, right? So understanding that we can see that, if something like this were to happen again, then the target could be exponentially higher. And so for that reason, we looked at a way to capture in the uh, uh, that move, right? And so the first thing we noticed was that calls were going to be very inflated. And so we can look at that now, actually, since it's still open. So you can see here, again, you can lose all or more of your capital if you don't know how to manage a vertical put. So this is not a buying recommendation, but today is January 7th. And so the reason we win the vertical put here is because it's sold at 120. So most people would say, well, why the hell would you sell something, or would you commit to the obligation of buying something at $120 when it's currently trading at 68? Right. Well, for that obligation, you're getting after the covered put, you're getting a credit of $58, which means your new break even ends up being a lot closer to current price than, for example, looking at the options chain. So now that I've showed you guys this, I'm going to go ahead and reset it to look at the options chain for QS. And so you can see here that if we go at least 30 days out, current price at $68. The $60 strike going 3 months out is $20, making your break-even price 80, which is significantly higher than the break-even price we are getting at the vertical put, while still capturing the up move up to the point of 120. Beyond that point, you're not really capturing anything because, well, it's done, right? And so at which point you can do a lot of things, but in terms of the opening contract, you can't really acquire that beyond that point. And so and even cutting down to like the lowest amount of days, right? So even cutting down to present time, or the nearest expiration, which we can go by next week, even the current price strike, it's still $10. So this one has a little bit of a better break-even price. Yesterday they were a lot more inflated. Here you can see that this is actually not very bad, but it does only expire after 8 days. So then if it goes against you in any meaningful way, as it's done the last couple of days, then you can lose more than just buying the stock outright, right? Which is why even if I'm buying, I will still at least go 3 months out to make it worthwhile to use the leverage. Otherwise, I might as well just buy the stock, right? So again, going back to first principles, we're looking at competitive advantage, right? The competitive advantage of options is the leverage in context of the risk. But if we have a 4-to-1 or a 2-to-1 leverage with a 25K account, uh, if we look at that in context to just buying the call, then it becomes it becomes almost null and void to use the competitive advantage, including the extrinsic value of the option, to go in that direction. So to make it worthwhile, I do go back at least 3 months, and so long as we don't buy it at the market highest volatility in the open or the closing, for example, depending on current market conditions, then you can always cash it out early. So let's say that it does move just $10 in a month from now. Well, because you're going to have still leftover extrinsic value with the remaining 2 months, you'll likely significantly profit anyway, as long as you don't wait too long into expiration as it's getting close to not hitting your target. So in that sense, the way we came to this trade is because someone in our trading group pointed that out. And if you're new to this channel, welcome. I do have capitalendeavor.com, which is free to join. Is just for me the path of least resistance to centralize everything and all of my content. Because as if you guys know me at all beyond trading, I do have two other YouTube channels. Well, I have the my metaphysical one, which is my primary passion, and then I have everything in Spanish. So, in terms of consolidating my time and efficiency, it's a learning management system platform. Just is a lot more intuitive. So that is, like I said, capitalendeavor.com or rubendante.com if you so prefer. That one, you're going to be exposed to a lot more esoteric content that you don't have to click on, but just full disclosure. It is a red pilled kind of a website. So anyway, I digress. So going by that, that's how we came to arriving at the QS trade, and it had retraced when it was brought up, well over 50%, obviously from all-time highs. So to me, I'm always going to throw a dart at it if nothing else, especially if it's something somewhat sustainable, or with fundamentally or basic fundamental logic and or supply and demand or price action logic. And so in that sense, again, that percentage move here, we can see is the biggest percentage move out of my present watch list. But it's really first principles thinking that allows me to arrive to this style of trading and to see the exponential gain. If you guys saw, a lot of money managers were kind of measuring their yearly returns from COVID, from March or whatever until the end of the year. And I believe, don't quote me, but I believe my return ended up being 120%, 100 and I'll share it with you guys. I'll post the link, although it's I'm sure it's posted somewhere on my Facebook or something, but it ended up being, up there, right? And so it's important to me to keep outperforming the market and other money managers to if I want to open up a fund eventually. So that's why I only wait to cash the account till the end or the beginning of the year if I can, or the quarter at the very least. And so anyway, by first principles, this became the obvious trade to land on to acquire those kind of exponential returns. And again, in my opinion, the best way to defragment the programming that we've received as traders is less in studying the markets and more the mechanics of the way you understand the world. So, which is why I believe my book Remembrance on Amazon that I just released is so integral to really acquiring a success in trading, because it does ultimately go back to your ideological mind frame and the way your brain is programmed to receive information. And it's something that, just like an iPhone, right? To get a software update, you plug it into the source and then you accept the terms and conditions, and the Wi-Fi signal or the update is already in the air. We just can't see it with the 3 photoreceptors in our eye. And so it has to go to sleep to download the information, right? Or to be plugged into a source to receive the information on the hardware system. Our brain, similarly, when we go to sleep, Harvard studies show that we retain information much better and test better upon sleeping on something than when we just go out and test on it. And there's been a few studies on that. And so a lot of acquiring success in trading is understanding the mechanics and the social memory complex that composite the market, right? The S&P 500 and the trader that trades the S&P 500 versus the social memory complex that trades Tesla versus the one that trades gold, and understanding those moves, right? But before we get to all of that, understanding what suits our personality and what we're looking to acquire from the markets is integral to that. And so for that reason, I strongly do believe that understanding first principles thinking is so important to acquire any meaningful success, not only in the markets, but in life at large, and why people have been so programmed to really be encapsulated by the prison of their mind by leveraging emotions, which is the biggest deterrent of financial success in the markets, because you are so liquid. It is a lot of a mirror of where you are mentally, emotionally, spiritually, and your ability to For example, if you hold on to losers, likely that is a depiction or an intrinsic manifestation of holding on for too long in your everyday life, manifesting in a very rapid quantum form in the markets. Inversely, over trading is a manifestation of perpetual deflection of responsibility and emotional or otherwise. So to presume that your ideological framework is not very realistically and intrinsically impacting every aspect of your trading is simply false, in my opinion. So with that, if you're new to my channel, definitely check out the foundational work, which is something that I copywrote a while back, way back actually. And the way I trade from, for example, stocks, if you're new, right? Like Apple stocks, to then, which is a 2-to-1 or 4-to-1 leverage, to then options on Apple, for example, which is about a 10-to-1 leverage, to then um, NASDAQ futures, which is the same correlated chart, to then, and so then increasing in leverage that way, to then ultimately end up in Forex with something like a correlated market, Euro USD or otherwise. And so you're looking at the same constant chart and then applying your goals, principles, and ideological framework onto your trading style and strategy. And so I did go over already why we went over the QS trade and why we took the trade that we did, the vertical put that was deep in the money. In terms of the current market condition, it was giving us free money because break-even price was beneath current price. And so that may not always be the case. But again, going back to first principles, you will be able to discern what trade best to take, not by memorizing a strategy per se, but by understanding the ideological frameworks of the markets at large and context to how you perceive the world and your priorities. So with that said, I do hope this video was helpful, guys. Thank you so much for watching. Feel free to comment anything if you are on the live chat, either on Zoom, which I don't see any questions, or on the YouTube page, which I also don't see any questions. So with that said, guys, again, today is January 7th. Thank you so much for being here with me, and I will see you guys next time. Bye.